All right, what's up, guys? Hello. NFP, I feel like it's been a hot sec since I've ran an NFP session. This is cool. We're like 7 minutes out from one. So let's get it going. Shout out Syndicate Squad, Seth specifically pointed this one out. I feel like I had this marked up, but it wasn't on my radar yesterday. So shout out to the homie. This played out beautifully over here. Let me know in the chat if you took this gold setup. I'm sure many of you did. All right, let me fix this thing real quick. All right, we're good. Cool, perfect. Hell yeah, let's go, Seth. Hopefully that you got triggered into. What's up, Seth? Greg, Brandon, Harshi, Nick, Noah, Jay. Happy Friday, gang. Happy birthday, for real this time, Jay. Happy birthday, actually, this time. Much love, bro. Appreciate you, your friendship, our conversations. Let's go. Melara, ¿cómo estás, bro? James, Rafa, Corey. You're in a sell on Dow. All right, we can dive into it. Patrick, Brandon, Alfredo. Buenos dias, carnal. All right, so I hit my max on the day on some accounts with this one. So yeah, that's good. Good stuff. But let me know in the chat. If what setups you guys have on your radar to kick things off. Will NFP bring us to specific entry zones? Now, what I'll do first off the rip, we had Tokyo lows here wipe out New York lows from NQ, and so here's kind of where we're at. I want to zoom out a little bit, and this is kind of like our 15-minute structure that we're in right here, and we worked our way down to this order block. I do still believe we have like a bigger picture, like a 1 hour time frame play that has a potential over here. So I do think we can go lower, maybe into this area here. So that has potential. Nothing that I'm looking to take right away with indices. I'm not really, I don't really have it. I think maybe if you saw New York lows get swept over here, and you traded this like mitigation, maybe you bought in NASDAQ at some point. But right now, not really an entry. Dow, we have a very clear pump here with London highs, taking out New York highs. Then the market kind of settles in over here. It does give us a pretty signature shakeout. The liquidity sweep, it loads up some buys throughout London session. And then it kind of just spikes up into this area here for sells. So if you did short Dow, I'd say we're probably best off right now. Just going break even, moving your stop to break even. Being ready for that. But yeah, so execution wise, I think the only setup that really piques my interest, and then now I wanted to show you guys S&P as well. S&P with that 15-minute structure, it has worked its way down basically as clean retracements as I can see here, and there is one more missing play, which is right here. We had S&P make a nice little push to the downside over here, and price getting to this area would be liquidating London, Tokyo, and yesterday's New York lows. So buys in this area with S&P look actually pretty solid. So these look good. And we're 2 minutes out from NFP. So yeah, I like these kind of trades from this area here. I wonder if that would position NASDAQ down to this low as well again. So I'm open to some buys. I'm open to buys at the buys. S&P one looks good specifically, since NFP sometimes can be very aggressive in its movement. Not always. It's kind of lost some of its flair. But yeah, this trade is possible. So I'm actually going to set an alert. I'm going to set a limit over here on MES. I can do 10 micro, so I'm just going to switch that over to a mini here. Alright, so something like this. Cool. So yeah, that's set in stone. Actually, I'm gonna raise it just a hair right there. All right. So yeah, that would be the position. A little bit more. So let's see if this triggers. Is literally seconds away. Let's see what kind of movement we get. All right. So off the open, spiking up a little bit on S&P. That takes out Dow's highs, so that goes crazy. And then NQ is pretty much just chilling. Okay, cool. So with that being said, what does that do with metals? That tanks metals down again. And so remember, we have some pretty key movement here as well. So gold with the aggressive pullback. And some of you might be attracted to another buy right here. I don't think I'm going to pull the trigger on this second buy setup because it looks like silver is way more bearish. So look at this here real quick. So here we have liquidity. You have one big push down. And then the market, tries to go up, but this has been more bearish than bullish, so this doesn't create bullish structure or anything. But the second reason is that silver is just big chilling. Like silver's way up here. So if you look at the low, if you mark up the range that silver and gold is in right now, silver's at like not even a 38.2 pullback in this range right now. So very, very mellow movement over here, whereas gold is aggressively pushing back. It's already at, I'd say at least the 618 pullback. Actually, exactly a 618 pullback. So at least for right now, with how aggressive this is moving, I wouldn't force it. Yeah, I wouldn't force it. So, okay, so now we're seeing kind of a rearrangement of the markets in general. And then let's take a look at these indices again. More consolidation between NASDAQ, mellow movement to the downside on NASDAQ's end. And then we have Dow, took out London highs, came crashing back down. So Dow, now Dow's in business. It looks like, let me just check the mini real quick. All right, cool. Make sure that these wicks are real. But look at how this completely wipes out any sellers before then crashing again. So if we can see this low, this is how I would love to see the market in order to take sells later. I would love to see Dow continue to be very bearish, push the market lower, and we might be in business over here. So check this out. So somewhere over here we could find shorts. However, we want to see lows kind of maintain over here. And now moving over to here, there's something that I want to show you guys. Now, yes, there's a couple things. One, there's like one last push down here before it rallied again in this area. So maybe the market wants to reverse out of here. I'm not going to count on that though. That's not going to be an entry for me. But what the other position that I think looks very interesting is actually right here. And so let me point out why. Why is this area right here an area of interest for me? Now what I want you to see is, I want you to take a look at this. So look at how the market here, and maybe it looks cleaner on the 10-minute. Yeah, okay. So at this time, if you look at how Dow was rolling up over here, we had built up quite a bit of resistance. So there was a trend line going on over here and all that. Obviously that gets broken through, but we also had just strong levels of resistance over here. And the market does the following. Right over here, we see everything going up, and then it gives us like this 5-minute candle here. Gets really bearish, trades down to here, so this lures in more sellers. Right, you see that little candlestick pattern here? So this lures in sellers one last time before it really just starts to break through. And based off of my back testing, these like last pushes down, these last movements tend to have quite a bit of an attraction to the market. And look at the volume, okay? The volume gets really high here. And this is like that last engulfing, but the volume was for buyers. So, and from here it just rips. So this is a different type of entry model that I've been experimenting with. It is in a way a mitigation, but it's a mitigation of a key order block. So one setup right here looks good. The up zone, it doesn't invalid. No te entendí, Daniel. So yeah, from here we could be looking at potential buy setups right over here. I'll have that on my radar. And then regarding the sells, now this sell looks like it more and more could become an opportunity. So now, I know we had originally planned for a S&P buy. And what I'm gonna do though is I am gonna delete my limits. Actually, let's take a look, right? We're now getting into London lows with Dow, like we're sitting there. NASDAQ is breaking below Tokyo lows, so on the bigger picture here, we're kind of getting a little bit closer. So okay, so liquidity sweeps there. And then now we're starting to see S&P starting to sweep Tokyo and London lows as well. So everything's lining up pretty decent. Alright, I mean, I'm willing to just see this continue to roll through. First thing though is sometimes what we get is the sweep. So right now we just got S&P sweep London and Tokyo lows. And it's starting to like eat it up, right? It's immediately reversing to the upside. And Q took out the lows and it's minor movement back up. And then Dow is kind of just making more liquidity here. So I wouldn't get too excited, or at least I'm not getting too excited about potential shakeouts quite yet. Like it could be an opportunity now that we've had the sweep over here. Let's see how it rolls out, right? Let's see how this continues to unfold. The more price action we get, the better. Don't want to get too excited about a potential play. Don't want to get ahead of ourselves. The zone between 51, hold on, The zone between 51,520 and 51,431 is a strong sell and it has an imbalance. You're saying this one, like over here. It's decent. No, I see your point for sure. Right over here. I think I prefer this one a bit more. So we'll see. I see what you mean. It's got potential for sure. For sure. All right, now remember this Dow sell. What originally my thoughts on this were, I wanted to see price stay down here for longer before I start to short this. It kind of came down and right back up, so I'm not necessarily going to go for that quite yet. Fair value gaps. No. I mean, in my opinion, a fair value gap is just like an imbalance, to be honest. I've never traded that like that. I don't really trade just imbalances on their own. Don't worry about it. If it's gonna overcomplicate things for now, they're not needed. But basically what I've been seeing over a long period of time and after months and months of backtesting, it's kind of like this. Like, I'll make it really simple. A lot of times you'll get something like this. So imagine imagine the market's bearish. So you got something like this, and then you start to see like resistance over here, right? So let's say something like that. And then there's one last push down before it really rips back to the upside. It breaks the structure. So imagine something like this here. I wish, can I change the colors of these things? Oh, I can. Okay, these need to be flipped. Wait, no, wait, these are right. I feel like I should be able to change these up a little bit. Whatever. But all right, so imagine that for whatever reason, these are like these are bearish. So it's like luring in sellers, and then you have a like bearish engulfing, or it doesn't have to be engulfing, I guess, but like, you know that there was a big sell-off, and as soon as that would typically entice retail sellers, so like, you know, just the masses, as soon as that would happen here, like that last push down where it's basically just like, nah, just sell, you know, just sell, it's got to come down, and then it rips. So in these specific moments where the context is it's loading up more liquidity and it's like the last enticement in, and then it continues, and then it breaks through and it obliterates all the liquidity, these kinds of moments are entry moments. So in a way, it's like mitigation, because you can tell like, okay, these sells were created on purpose to lure in money before the market continues. So it's like exchanging those sells back to buys. So it is like a mitigation of like a key order block. And so in this example here, you had a whole bunch of resistance, right? You have another key push down, an aggressive move down, the final trap, and then it rips through. So I'm looking for buys like right around here. So I guess, is it in a fair value gap? Technically, yeah. It would be within one, like within an imbalance. You can see it's just kind of moving in one direction. Yeah. All right. So this sell I'm not going to be taking. We clear the highs, we come back down, but we come back down and up way too quickly. So I'm not really, I don't see this push down as an enticement for, it's not creating a downtrend in my opinion here. That's not what we're getting. If anything, it looks to me like it's kind of the opposite. Like we push down solely to liquidate Tokyo and London lows, whether it's with NQ or S&P, and then we can rip from here. So, I mean, maybe it holds up. Maybe it survives. Like it's gonna last. I'll leave that up to. If you like it enough to take it, be my guest. I definitely see flaws. The sweep, if this would have traded here for longer, I mean, it would have been down, but it didn't. Sadly, this left a lot of liquidity. A part of me does think this is going to work, but I'm going to wait it out. And now what could be a trade for sure is, because we see the market sweep liquidity, we see it clearly comes back up. Can we get one of two things, right? Can we create a bit more consolidation in here? Are we going to get a classic break and retest? Now remember, I'm not taking the break and retest as a typical entry model. I want them to get lured in. I want these retail sellers to get lured into the market and into a little bit of profit. And from there, take the buy and be on the other side of the trade. So something like this is what I'm looking for, whether it's with NASDAQ or it's with S&P over here. So whichever, that looks terrible. So either way works for me. Now today, we already had our news events, so we have no more high impact news. There's like medium news for CAD later. So chilling. I am going to delete this limit for now. Okay, so going back to the gold trade, right? We talked about how I could see people wanting to buy gold right here, and it rejected right now, right? It's currently mitigated the 786, so it came into here, rejected this move. Here is like the entry zone. So here's your point of interest. But I stayed out just because of what we have going on here with silver. Silver, to me, there's a lot of liquidity here. I wouldn't be surprised if we get another push down into this zone. And even then, I still wouldn't buy because this doesn't look to me like a healthy price action. This looks like all it did was, at least for bullish price action, looks like the market, swept liquidity, filled in balance, and then just goes, all right, cool, well, let's keep moving down. So yeah, I'm not really committed to, I don't see it. What makes more sense to me would be probably selling metals. We had one last push up right here before the market drops. See it right here. The final push to the upside before everything falls. Let me double check if it exists like this here with the mini chart as well. Yeah. So this makes more sense in my opinion. Selling over here. Entonces no estoy buscando compras aquí. Creo que plata nos va a bajar mucho más y creo que va a empujar a oro más abajo. Now, but wait a minute. All right, hold up. We're not finished yet though. Because I don't know if Nadir, if you're on right now, bro, but remember the sell I told you up here? This one played out perfect. But there's still this lower zone where we had a nice sweep below and the market rallied. Now, everything has been more bearish. I don't think we're changing structure yet. We probably go lower than this. But I do think we could get at least a decent rejection out of here. So a liquidity sweep here into this zone, playing out of this. Maybe not even a 3R, but just even playing back into these levels might be enough. All right, so look at how metals are dropping some more. They're in the zone. I'm not buying. No estoy comprando todavía. You have silver now starting to break through, starting to liquidate, almost at a 618 pullback. So there's just got more to trade into over here. So yeah, I would personally avoid this gold buy right here. That's what I'm doing. Obviously, you guys do your thing. I just show you what I do, how I think about trades. That's it. My way isn't the way. It's just a way. From here, what we're seeing with oil, right? Oil had a very clean sweep of lows during London session. Rallied back upwards for a very brief amount of time. I wouldn't have bought here, to be honest. The structure here wasn't enough. And then now we also saw during London a sweep of the high. So London then, with oil, takes out the highs, plays into the order block, and then immediately starts to crash down. So right now, I think the important thing is the change in direction. So can oil continue to sell off from here? I think it's possible. But okay. Metals cracking below a 618 pullback. Great. Gold breaking below. Great. Hopefully you guys listened and you didn't take it. Alfredo, ojalá, espero que pudiste escuchar mi punto de vista por ahí. I was in for the NQ shakeout this morning for mid-range. Accidentally placed it on NQ rather than MNQ and had to delete it. Why didn't you place it with MNQ after that? Or did it trigger and then what happened? So I do like the buy here. I like the buy on gold down here though. So let me know what y'all think. I like when I mark things up a second time and it's the exact same the exact same way I was looking at it the first time. For now, okay, it's just holding up pretty well. I wonder if we're gonna end up seeing silver break the London low or not. I don't necessarily need it to. There is pretty crazy divergence here. So here's where I don't, how do I explain this? Like, the divergence with silver is so good that even though this did break above and liquidate and then crash, a part of me still does want this entry. This silver entry, just because the divergence is so crazy. Like, we're getting way below the low here with gold. But I wouldn't pull the trigger on silver until or unless we would have gold way over here. So for now, and this would be with less risk. So typically this would be invalid, but the divergence is pretty strong. Like, just look at the massive difference between how this is higher lows and the other one is aggressively making lower lows. Wish gold contracts weren't so expensive, can't afford to take it. Even with micros, you can't take this one. So, okay, let's say you had one micro here. Let's see what the risk would be. 179 on this right here. You can't risk 179. MGC. I'd be shocked if you can't risk 179. I mean, I guess it depends on what your what your plan, like your risk plan is for your account. Yeah, let me know. Okay, so look at that. Silver now, still going lower. No entries for me. I refuse to take a position until we get into these key zones over here. Now, this is something that I want to just double check real quick. Going back here to the smaller time frame. I have the sweep down marked up from like right here, because here was just kind of chilling sideways. And then this really was the push. So maybe you mark it up a little bit higher, but like this looks good to me. All right, so we're still going, working our way down. Excellent, excellent. We could go a split screen. Let's see if split screen is gonna be decent. And then we have silver over here, still chilling. Okay. Let's see, I'll have another alert here. All right, in the meantime, let's check in on indices again, because if metals are moving like this, then what are indices doing? All right, so check us out. Indices, here I've been yapping. Meanwhile, indices, they move sideways for like 5-6 minutes, worked its way down with NQ and S&P. Is this worth the buy? What do you guys think? Are these worth buying right now? The lows got swept, sideways movement, S&P, NQ, Dow. I'm gonna take a position on S&P here. I'm not going full risk. The demand wasn't the best, but it wasn't terrible. I'm going like half R. Oh, that's not what I meant to do. This already moved away from here, so this actually is getting less nice. I'm on ES, right? Hold on. Everybody calm down. Funny enough, though, Dow still has these London lows to sweep. This is irritating. I'm not gonna lie. I'm gonna hold off. I'm waiting. Okay, so take a look at silver. Now 886 pullback way down here. Gold almost at entry zone. Still has a little more to drop. You could argue, this is where you could say like, oh well, it looks like it starts to sell off from up here. From way up here. So if that's your point of view, then I could understand some reversals out of metals right now. I have mine a little bit lower, right over here. So I'm gonna start to set my trade right here on gold. Silver now finally breaking below. Okay, chilling. Right into the 8 a.m. open. Starting to see this slow down a little bit. So what I'm gonna do is I'm actually gonna take a contract here. If you want to work your way back down here, guy. Fuck. Come on. Patrick, you never really answered my question, but that's alright, I guess. Let's see if we can get back into the zone to have a decent enough risk reward. This might just mitigate without me. That's some bullshit. That's some bullshit right there if I've ever seen it. Crazy work. That's lame. I think it's gone. Let's see. Meanwhile, now mitigation on, let's see, or shakeout looks better for metals. So this S&P mitigation that I was looking for, I wanted to see gold get into the right position in order to take this one. So it has. So what I'm gonna do is I am gonna take I'm gonna take a half R on S&P here. Little demand, see if this goes through, if this holds up. Now that gold has potential reversal territory. You caught it? Nice, Leia. Yeah, I think gold might be gone. The sweep down, let's see, as we measure this. What the fuck? Stop. What are you doing? Alright. So this was about 238 points. So the reversal actively is moving pretty well. It's just about there. So based on what we're seeing right now, if this were to keep going, then it would get there. Now reading the small time frame, I mean, if you wanted to take a position, if you think this is already in the process of mitigating, you would need some sort of confirmation to be able to take a position right here. I don't necessarily think, or you have to have a way bigger risk reward there, like way bigger stop. Not sure if that's something that you guys really want. So be mindful with this one, chasing this one. Based on my calculations here, we still have some room to run. So let's see. We haven't fully made the push. So yeah, we'll see. I do think we'll go another leg up. Like for, let's say if we're gonna stack an entry or have a re-entry, I don't really have anything here for that. So I'm kind of just gonna stay on the sidelines on this one, sadly. You are getting divergence though. Look how silver is still going lower. It just broke this low while gold is still holding up. So yeah, I do think we're gonna end up pushing higher from here. My only other take would be if you were going to take a position like that, it would have been like probably something like this and then let it ride, which would have been a better RR by far too. But what's giving us a good perspective on a re-entry is again the divergence. Like silver spiked and took out the lows while gold is still making higher lows. So something like this and scaling in again, yeah, would have made sense. Like logically, contextually, not so much because of a smart money position. So just giving you guys at least like how to read price action in real time. Like what did this, and the question is, what would this still be worth? Let's say not even half risk, but it'd be worth less than that. So let's say this example would be 212. For me, that's a borderline like a 0.33R for risk. So like would I be open to a position like this? Honestly, yeah, tiny little position right there. Why not? I'm open to that. And then from here, the big thing is because of the divergence. You're getting these going lower while gold is still holding. And on top of that, gold still has mitigation. Like it hasn't completed this movement here. It hasn't finished the sell-off. So this, remember, this move here was roughly 240 points. So the market from here would have to push that like 240. So it still has more room to run. With that being said, yeah, you can see that play out. Let's see now. Okay, so looking at the market, we're finally getting below again London, Tokyo lows here with NQ pushing a little bit lower. Dow still kind of struggling to push even lower. Hasn't swept London lows, hasn't swept Tokyo lows. Not that it needs to yet, but it just hasn't. And then ES wanted to make one more push down, it looks like. I wonder if we get down to here. And then we have gold continuing to move forward a little bit here. So original entry missed. I took a smaller risk on this trade after just noticing the divergence again with metals. So this was the original decision. Still able to sneak my way in here. And the biggest thing is this. Remember, you don't want to get caught up taking a trade out of FOMO. You want to take a trade because there's technical reasoning or smart money context. Like you're putting the pieces together. So being able to see that, okay, silver is still wanting to go lower, as you saw here. All right, silver was still pushing lower while gold was holding structure. That was a good sign that this was going to keep holding. And it was a good sign that we were seeing a shift in price action. Because remember, gold was the one that was originally dropping the most, right? And then the gold trade that we had over here this lower one, which didn't activate by like 20 points or something. This has a lot more liquidity. So this one sweeps all of this. Thursdays, buyers, Wednesdays, all the lows for the week, trades down to this extreme. So there's a lot more money available. It breaks more of these structures. So the reversal can be pretty strong. Now the take profit is what matters here. Take profit really matters here. Now, most conservative place to take your money, in my opinion, which would be where structure and imbalance meets. Now, this is obviously a lower risk reward. You're looking at closer to a 2R here, where you have the London low and the imbalance. I think that you could at least push this a bit further to where we saw some more structure and imbalance. That puts you closer to a 3R. That's if you happen to take an entry with me over here. Maybe you didn't. Or maybe you caught the low over here, then you're looking at a different trade. So I think that at least to here, you still have a good setup. Now, one thing that I want to bring up here is this whole time with gold, the 1 hour is still bearish. So the big picture is still bearish. It took out these highs and it just fails. It keeps failing to stay up here. And we worked our way all the way back down. So is there enough, do I have enough evidence that we're finally going to break above? That we're going to start breaking these highs and trade up to here? Not really. I don't really have enough of that. I think it's very possible that gold may want to still go lower into this area from March 23rd. So I don't necessarily need to catch the huge move, a break above or anything. I'm a bit more focused on just, all right, let me get some of this imbalance fill. Let me just get a piece of this and then call it. So that's how I'm approaching it. Market's moving decent. We have New York open in 18 minutes. So that might shake things up here a little bit. Entry wise, funny enough, NFP was mitigated with indices. Like it did give a good rejection right there. Let me check out the chat here real quick. Lucid account giveaway today. Yes. So, if thanks for the reminder. If you guys haven't already seen the video, I posted a video. I think it was like Monday or Tuesday, and I was basically broke down an oil trade, and I called, like every single element of it. It was a dope trade. And it was just a really duplicatable system. It always is. You guys see it happen all the time on here. So if you haven't yet, then I recommend you go check the video out at some point. There's a new entry model PDF, or not a new entry model, but new PDF of the entry models that we've been working on, and it's in there as well. You guys can get that and check it out. But yeah, leave a comment in the video, share it, hype it up. There's like a hype button. I think you have to like it first, and then you can hype it. So here's the video. Go drop a comment in there. And right after New York Open, I'll do the giveaway for one person that comments. It'll be a 50K Lucid Flex account. So if you guys want to win, check it out. Let's see here. All right. So we're chilling here. Squeezing. So this is either going to load up some more retail sells and then rip from here. I haven't moved my stop yet. I kind of want to see it break out first. Any of you guys end up taking gold? I feel like the chat fell asleep. Is the chat alive? Is this thing on? In gold? It's a gold. Sweet. Cool. New York Open in 14. Oh, a lot of you guys took gold. Oh, nice. Did you guys market execute on the original, like the lower entry, or how'd you guys approach it? Or did you take the second entry that I took? Lower entry, better risk for you. Nice. Missed the first one. Didn't attempt a second. That's okay. Took the second one. Second. Cool, cool. Well, let's see if it's going to be worth it for us today, ladies and gentlemen. All right, you know what I wanted to check on? Oil. I haven't taken an oil trade in a little minute here. What's our oil friend doing here? Oil, it's weird. Oil has been moving a lot more similar to metals lately. Like the inverse correlation has kind of disappeared, and they've all been lined up. So we saw oil trade all the way down to here, basically making equal lows here. I still have a zone marked up on oil way down here, right under 88. So still waiting on this. Don't have any entries yet on oil, not for buys, but the sells still look good. We had a very clean sweep of these highs before everything started to work its way down. So yeah, oil shorts here in the future look very promising. I took an NGD buy last night and only got 68 bucks from it when the market crashed this morning. Glad I trailed the stop because I would have got nothing otherwise. Nice. Patrick, I asked you about gold contracts. I don't know. What's your risk per trade in which you weren't able to take a position on gold? Because with the micro, like you should be able to get in there. Like, what are you risking where you can't? Yo, yesterday's market was going crazy. Like, Robinhood pumped like crazy. Snapchat, little recovery. What else was it? Like AMC. Do you guys see the Odyssey crashed? 200 per trade, it would have cost 240. Live a little, guy. At that point, I mean, it's $40. The cost of your challenge is really, what, like 70, 80, 90 bucks maybe? For one trade. I feel like you have to be a bit more, if you're trading like these 50Ks, not aggressive, I'm not saying like break your plans, but like gotta give yourself a little bit of wiggle room, or at least reduce, tighten up your stop then, you know. I mean, yeah, like of course the goal is to keep your risk as consistent as possible. But at the end of the day, like if it's between, I'd say give yourself a range, because you can't perfectly trade, you know, with futures, you can't perfectly trade the exact amount every time. You can get pretty close. But if you're at that point where you're risking, where you're at like a 50K account and you're risking 200 to 250, more than likely. Otherwise, you're gonna freeze. You're gonna miss out on quite a bit. And I feel like losing an extra $40 is worth the attempt, and two, what's actually at risk is never the 240, especially if you're on a challenge. The real risk that you have is whatever you paid for the challenge. So is it worth the experiment is the question, right? For the, like, everyone here, if you're under, let's say, a year or even 2 years, especially if you haven't been like consciously and intentionally building out your system, and like if you're learning by yourself especially, then, and this is just advice to everyone in general, but like your goal is to get the reps in, to learn about all the different elements of the technicals. Now if you have no idea, right, if you have no idea like what you should be doing, where you should be at, like at all, then you guys feel free to take to do our traders consultation. We literally have a team built around giving you guys, like, directing you towards what resources can help you develop your trading system, whether it's free or whether it's something else that we have. So if you guys have never checked that out, then go ahead and check out that consultation call that we do. It should give you honestly a pretty good, like a really good direction on what to do. So if you guys never done that before, then do that here. Obviously for those of you that are already doing fast track and syndicate stuff, you guys already have direction and all that. But if not, then you guys can go ahead and check that out right there. How many challenges per month should you limit yourself to? Depends on your budget, man. It depends on your budget. It depends on how you're approaching these accounts. It depends on, like, do you have like your well, number one is, okay, how developed is your trading system? If it's not that developed, then I would say go low risk on challenges, and then definitely have a budget for yourself. So what's your income look like? I would say, for example, for most people, you should be, if you've never, like, every person should be investing minimum 5 to 10% of their income. Minimum, like that's bare minimum. Now, if your income isn't that high and you're here to trade, is because you want to increase your cash flow, right? You want to increase what that income can look like. And so getting funded or funding your live account, that is what's positioning you to be able to produce more income for yourself. So I would say it's the same thing goes, like at least 5 to 10% of your income. I'd say go start lower as you're rolling out and getting better at trading. So that would be my bare minimum. That's because I believe in betting in myself. So like if I was starting out again, that's how I would approach it. Start with less and smaller accounts, like the 25Ks. If as you're starting out, and then keep it to like 50Ks as you get a bit more experience and you develop yourself. No mames, we back. Good morning. So yeah, I would say like if you're making, I don't know, $2,000 a month, then I'd say like you should be getting at least, obviously have constraints on your expenses, know what you're doing, like know your numbers, know more than one. And then from there, 200 a month, a challenge or two. Start with 25Ks, especially if you're newer to trading. If you're more experienced, then maybe you're doing a little bit more. You're better off being able to do a few more challenges than do one big one. That's at least what I think. And then if you have some decent experience, let's say you're making like $4,000 a month, then I would budget anywhere from like 200 to 400 minimum. If you guys are in like the 6-figure income territory, then yeah, 5 to 100 to 1,000 in challenges. Especially if you're good, like if you're good at this now. All of you guys, everyone in the syndicate knows, like in the syndicate, they're like, they got their systems down. So definitely it's like you are investing in your cash flows. So there's two types of investing, right? There's I guess a handful of investing types, but for trading and investing in traditional assets, it's like you're investing for portfolio purposes, for your net worth, your retirement, or you're investing as a trader, you're investing to be able to produce cash flow. So for example, you might spend $100 let's say, it might cost you $300 in challenges in order to get a $1,500 payout. That's a 5x on your investment, right? That's great. That's amazing. So that's how at least I think about things. Thanos in a Bulls jersey goes hard. What is your advice with this situation I'm in? I've passed like 15 50Ks accounts and gotten funded, but cannot make it to a payout. You should join the syndicate is my advice. It sounds exact, like that's literally the profile of traders we develop. Yeah, 100%. If you've passed 15 and you can't get funded, it's not even a risk issue. More than likely, it's not even a risk issue. You probably have an issue with impulse control. 15, yeah, you're probably more impulsive, or there has to do something with your expectations, the timeline that you're on. It depends. Do you play fun and eval? No, I don't. No, I don't trade them the same way. There's different things on the line, for sure. So, for you, my guy, here's what you gotta do. You gotta click this link, ISAC, and you gotta schedule a time to get yourself right. And then we'll see what works. But yeah, it does sound like you need to drop your risk, but there's probably a couple other things you gotta do there too. It's 15. Yeah, there's another problem. I'm buying 5 accounts today. What a savage. Let me get one. All right, guys, we got New York open here in a little bit. This gold trade reacted decent. Let's see what silver is looking like. Silver's at a deeper pullback too. So this had a decent reaction. I can't, this is pissing me off. All right, here we go. 210 ticks or so. So yeah, I think this has got more. I'm okay with just holding this here. I'm not really tripping. If it wins, great. If it loses, great. Definitely prepared for that. Divergence is still good. This is still at a higher low versus this being all the way back down to here. And then New York Open here is going to kick off. So Dow holding up strong. It's got equal lows down here, so that's part of the reason why I didn't do anything. And now it's dumping right off the open, so it pumped just to dump. Meanwhile, NQ, S&P chopping here. Remember, there's this NQ buy that I liked as well. It was a higher time frame play, pushing down to here. Now what we're seeing as well is, where is it? Was it Dow here? I think I'm about to get stopped out on gold. Dow just took out London lows and then recovering. Just got stopped out on gold by like a hair. It still hasn't mitigated. So S&P taking out New York lows as well now. And Q pushing down, recovering a little bit quicker. So technically, if you wanted to take a swing at gold, I mean, you still could. For me, I think we still have room to run. The question is, are you trading it this way or not? There's a lot going on here, right? So possible gold play. S&P got into mitigation zone. Dow still looks like it could take out Tokyo lows to trade into either here or here. And then NQ played into that higher time frame zone as well. So indices starting to give a little bit of a bounce. Maybe some of y'all made a decision on executing something indices related. And then gold apparently didn't want to hold this structure here. And it said, nah, actually, remember that trade you wanted to take? Yeah, we would have triggered that thing. Look at that. No, it still would have missed. No. I still would have missed. Look at this. Wow. That's crazy. That's crazy. The disrespect today. The disrespect. Did gold do that to GC? Yeah, it did. The audacity. Was that a sneeze? Huh? Oh, okay. Alright, so yeah, I mean, S&P rejecting pretty nicely. Dow, and Q, okay. I want you guys to notice how right now metals are definitely more bearish by far than indices. Like metals just keep dropping more and more aggressively. Indices are like slowly inching their way down. I feel like we won't fully get an indices reversal or a gold reversal or metals reversals until we take out Tokyo lows. I could be wrong, but there just seems to be still more incentive. Like there's a lot of liquidity sitting right here. I'd be just surprised if we don't keep going a little bit lower. So no rush on my end. Not yet. I possibly take a shot at gold lower. I'm gonna just hold off. I'm gonna wait. I want to wait for and see if these indices are gonna make that push. Will indices crash one more time? Get a strong liquidity sweep? Because if that does happen, I do think we get gold going lower. Like gold just getting into a better positioning. And the cost, obviously, of optimizing your entry, having the proper stop placements, the cost sometimes is you might miss out. So you have to decide, like, that's okay with you. Like, all right, I'm going to miss out on possible profits, but if you wait it out, then you could have a very, very optimal RR, and that's better. So logic wise, sometimes you might be thinking, but what if I miss out on this trade? What if I miss out? What if it leaves without me? But if you know there's motives that could continue to push the market down, then why force it? So I still think we go lower. Let me check out the chat. Isaac with no response whatsoever to his question, so I'm glad this was a one-way conversation. Let's see. All right, cool. So indices pushing lower. Okay. Here we go. That's pushing metals. Y'all be like, hey, let me get a piece of your time here, and wisdom. It's not okay, Isaac. I need all of your attention and time. How dare you be productive and make a living out of yourself? The audacity. All right, Tokyo lows. All right, so this, just take this. NQ pushing lower. Okay. S&P going lower. Gold going lower. So this is pretty borderline on whether it mitigated, right? So I'm gonna hold off. Like I said, I'm gonna just keep waiting on this until we get into the right territory for reversals. Because metals are so bearish, I think I'm just gonna move on, honestly, from gold buys anymore. I don't think I'm gonna really force anything. It seems to have just much more bearish momentum than anything else. Here we go. Dow finally cracking the lows. And then, all right, so now comes the important part. Is a liquidation like this, sweeping all of this. This could reverse right out of here even, which would be really annoying. Any NQ to 29,640. I can see that. Yeah. I don't know if it's gonna happen right now, but yeah, I think we can get there. I see that for sure. S&P to this original buy that we zoned that we liked down here, getting really close. We're starting to see NASDAQ slow down on its drop. Playing out of this area right here. This had already rejected and mitigated. This is playing out of potential order block right there. So now that, and this is I guess decision for everyone to make here. But now that we've taken out a lot of liquidity over here, it's decision making time with the markets. Is this gonna hold or not? So with the liquidity sweep that we're seeing, the push into this zone, the stop, place my stop right there. Broke below here already as well. All right, I'm gonna take my position on Dow. The RR here is decent enough. I'm gonna actually go half here, and if we go a little lower, I'll take my other position. If we got another push down, then I'm open to it, because I think we could go a little bit lower. If not, then whatever, I'm in at half R. And then RR wise, we're looking at about a 2R from here, trading back into this last push up. So we'll see if the volume is here for the reversal. And if you wanted to split your difference, obviously you have S&P that's kind of somewhere in the middle. I know sometimes it's a little annoying to trade S&P because it kind of averages out whatever NQ is doing. But NASDAQ's still pushing a little bit further down, and Q might want to, like I've said earlier, and Q might want to break below these lows first. Here was like that big spike down. So we already had a reversal there was already a reversal out of this here. So this move right here, right, that mitigated this here. So breaking below here, I think is pretty likely. And then, all right, oh, cool. So we have Dow playing into this area. So this is where I wanted my second entry. Perfect. So now I can take my other position here. And I'm roughly averaged into where I wanted to be anyways. Okay. Definitely impulse issues. Cool. So those are going to be a combination of multiple factors that we would work on. Perception on where we are, where we should be. A lot of subconscious programming that we have to work on as traders. How we perceive certain elements to our system. Risk can always be a factor, because then the way you risk with one trade definitely will influence what happens to the next one. So a lot of the elements combined make a difference. All right, let's see how far down this took gold to now. Okay, oh, now so gold's still in the zone. Interesting. So gold is still way over here where we were still in a valid buy position. Obviously, I have my trade open on Dow. Where is this thing? silver here, bless you, all the way down over here. And then the gold trade is at this area. Now, the reason I held back from gold trades were because they were just dropping so aggressively. But now look at the difference between metals and indices, right? Indices are still going lower and lower and lower, while metals are now starting to hold up a lot better. So I'm gonna take my position on here. And as you guys know, like, I shoot. Like, I don't hold back, I'm gonna shoot. Because I just believe in my setups. And so shooters are gonna shoot. Even if I get stopped out, like I already got stopped out before. Oh, a small loss on gold earlier. And then I guess I could have waited on Dow trade since we had NQ. Literally I said NQ probably breaks this order block first, then gives us the reversal. So we'll see. Because I'm willing to take my setups since I know there's always gonna be more, and if they're valid, take your shot. All right, so looking at this, playing out of this little order block first right now. All right, MNQ breaking those lows. There we go. All right. Wait, what just happened? Oh, I have the wrong account on here. No. Oh, okay. Well, that's good, I guess. I was not trading my lead account, so that's nice. All those losses went to just one. Sweet. Okay, hold on, guys. That's weird. Do I have a different browser up? One second, y'all. One second. Okay. All right, so basically, yeah, this trade's still going. I still also think that if this were not to play out, I would still take my position right over here. Either way, this thing can still keep running. And so, yeah, apparently I had, I had this browser here logged into an Apex account with it was like $1,000 daily loss limit, so no wonder. And keep bleeding out still. Very nice. Dow here chopping up. We didn't take any positions here with S&P either, so this is holding it down. And then gold, where's that? All right, gold still kind of holding on tight right over here. So still have gold longs and Dow bullish bias. If this gives us a great reversal into imbalance fill, fantastic. Otherwise, then this order block is what I'm looking to take here as well. So either way it works for me. And you have the potential reversal from NQ. Not that I'm taking NQ trades. NQ has been the most bearish all session, so I'm not looking to participate in that at the moment. So let's see. Let's see how this continues to move. Originally, right, I was staying out of gold over here since it was just so, it was starting to drop off a lot more. Once price started to settle here and everything else was dropping, I was like, all right, cool, we're starting to see a divergence. That may or may not hold up, so we'll see. But at least for me, like, I just don't fear being in the market. I'd rather take my positions and then have the system just do its thing. So that's at least my point of view with it. Sometimes that's how I end up, I'll take 2-3 losses in a row, but the system will greenlight something, and then, all of a sudden you hit 3R, 4R, and you make up for it, and then some. So, yeah, not really, like, I'm just not concerned too much with, I don't think about too much the feeling of losing, because I know trading is a sport in which you might feel loss more often and wins less often, but the wins have a way heavier weight than the losses anyways. So that's at least how I choose to approach it. But yeah, guys, we'll be back again at it on, I gotta do this giveaway. Hold on, give me a second. Let me give away this 50K account. One second. All right, so is this comment picker thing? All right, here, let me do this giveaway. Here's the video. So if you commented on this video, you liked it, hyped it, all that good stuff, then you will be qualified. So link here, paste. Number of winners 1, unique replies. Wait, include replies? No, unique authors. The unique authors filter, no duplicate users, allows you to select a random winner from all unique authors who comment in your videos. This is perfect for, okay, perfect. Sweet. All right, guys. Make a prayer or something. It's your time to shine. All right, here you go. We have Fashionista Jane. Love this outfit. No, I'm just kidding. That's a AI thing. I was like, what the fuck is this? I was like, what outfit? No, I don't need AI automation. Puccini. Puccini with the 50K. Better than Netflix and chill. You know what? You're right. Well done, man. Congrats. I was so confused on that comment. I was like, what? It was a pop-up though. I know I got this. All right, so let's go, Emmanuel. I'll send you the link, bro. You're good. Oh man, this is rigged. All right, well done. Enjoy the gains. Oh, big spike on Dow right now. Sheesh. Things starting to get momentum. Let's go. Well, enjoy it. Congrats, guys. We'll be doing more every week. You guys already know this. If you guys remember, Fast Track does start next, the webinar for us. If you want to learn more about how we do our 30-day program, this is designed for people who are newer to trading, or you've been trading for a long time, but you feel like you're not making any progress. Like you feel like you're still a beginner. Either you are a beginner or you still feel like a beginner. That's what this is designed for. It's 30 days, super, super, super interactive, starting from basically zero, but every single day you have assignments that you're doing, you're turning in, you're getting feedback. So if that's you, then make sure you check it out. And at least you go and you check out what the, what the webinar is going to be about, so you have a better idea of what to expect. So I'm going to go ahead and give you guys that information here. This is just for the webinar, just so that you can find out more about it and see if it's the right fit for you. For us, we focus way more on being hands-on with you guys rather than just having some sort of course, some video course that you just watch on yourself. And then that's why we just do these here, so you can put in the reps regardless if you're in any of our programs or not. So guys, check out the webinar here. There's a link to that. The webinar is going to be next Wednesday. So if you want to be registered, check it out there. And then for the rest of you, some of you, I'll see you tomorrow on our syndicate session, feedback session. We'll go over the week and a couple lessons that we have. And the rest of you, I will see on Monday. And we'll be trading together here once again, my friends. So much love, y'all. Thanks for, being here, hanging out, winning, losing, the whole nine. And yeah, stay in touch, y'all. Peace.